Well, welcome back, everybody. As promised, I've got Joseph Schachter here with me right now. Joseph, let's just dive right into it. We've seen some great price action up and down in the energy markets. I mean, we go back to April of this year, we're almost at $90, and then we fell to about $65 here last week in WTI. You've had some forecasts. I think I saw you put out a piece on, was that September 10th when we made the low? You had your buy alert. Tell me, what's your view here on the price action, and what are you doing about it?
It's good to be with you, Victor, on Money Talks. And the big thing is there's been two forces pulling on the price of oil. When there's war premium, when there was the worry about Iran invading and being with Hezbollah and Hamas and the Houthis, Israel, you got up to that $88 that you talked about in mid-April. When things cooled down, it backed off to 72. Then when there was another attack in Hezbollah on the north, it went back up to 84. But the fundamentals of the oil and gas industry right now, the demand side is weak. And we've seen that from the US EIA data that comes out weekly. Year to date, the total demand for energy product is down 0.3%, and total gasoline demand is down 0.4%. And that comes from the weekly EIA data. In China, we see negative data of about 300,000 barrels a day. Most of that is diesel. So if the two biggest energy consuming economies are not consuming what people had forecast, the goal originally at the beginning of the year was we'd have 2 to 2.5 million barrels of demand globally from 101 to 103 million barrels. It looks like that number is only 700 or 800,000 because of the sloppiness in the States and the sloppiness in China. Germany's having problems. Japan is having problems. So we got down, and we have three triggers that we watched for the buy signal. One was the price of oil, which got there, and we sent out on Tuesday of last week 5 new buy recommendations, and also we reiterated 3 already on the recommended list that were extremely cheap. And the second trigger for us is the absolute level of the S&P TSX. That we think is going to come down more. We've bounced because of the attack by Israel against the Hezbollah commanders with their walkie-talkies and the equipment that they were using, the pagers. And I think that $5, $6 is going to erode as we get more economic data and more demand data showing it's weaker. And we'll test the lows. And individuals should use any time we're sub $70 WTI to be buyers. There's great names with great yields out there. We can go through that if you want. And we like names right across the board, from royalty trusts to oil producers, domestic and international, natural gas producers, domestic, international, and the service sector. We are getting near the cheapest levels since since the let's say 2020s in some cases. And so I think people should be looking. Every time you see a pullback, and if you are, a subscriber, we will inform you through our action alerts that we send out, and we'll probably be adding more names when we come down again. And if any of the other buy signals get triggered, the bullish percentage index or the absolute level from the TSX Energy Index, we will be sending out more buy recommendations. And what we're telling people is, we were before saying be 70, 80% of your target weight. We're saying now, with the next decline into year end, it could be related to tax loss selling again in November, early December, but use that period of time to take your positions up to the weight you want to, which is full. You may be a dividend player in the pipeline infrastructure. You may be a growth story investor. You may want to just pay the LNG potential off the west coast to Canada. Whatever your investment focus is, whatever you get your names that you want, pick a price that you want, and when we see the sub 70s and we see the washout like we did, when the price of oil went from 77 in the third week of August to 65 in the second week of September, when we see a washout like that, take advantage of them, because those windows to buy don't last very long.
Now, Joe, when you're saying to step up and buy, when you get for instance, WTI dropping below $70, and I saw gasoline prices actually in the United States had come down more sharply than WTI. when you're saying this is an opportunity to buy, what's your time horizon in terms of your expectation? If you're buying here below $70, you're not looking to flip it out before Christmas. I think you've got a longer term time horizon than that.
I think we're in an energy super cycle like we had from 74 to 81 when Japan became the big new consumer. 99 to 2008, we had China as the new consumer. And from 2020 on, it's going to be the third world that's bringing on copper, lithium, nickel, all the things we're going to need for the renewable world. And they're going to increase consumption. The OECD production demand numbers will come down. The non-OECD numbers will go up. And I think we're going to be looking in second half of 2025, over $90 WTI. And I think in 2026, over $100 on a consistent basis into the end of the decade.
Okay, Canada's been becoming a major world force here in terms of our energy production and that sort of thing. Is the world looking at buying Canadian oil and gas stocks, or is it still just Canadians that are in that market?
Well, we're seeing institutions wanting, because of the large natural gas reserves that we have in the Montney and the Duvernay, they're nibbling there. Because of the TMX coming on, they're nibbling on some of the oil names, the big names that are producing from the oil sands and from SAGD. They're buying them. But I think that we're not seeing the M&A side. Historically, near the end of the cycle, when everybody are really worried about security of supply, we end up seeing the takeovers. If you remember, Mike Rose sold Berkeley to an international player. He sold Duvernay to an international player. You're going to see those kinds of things rather than the mergers we see now in Canada, where, for example, we just saw, Rubellite merge with Perpetual, and we just saw Tourmaline purchase Crew Energy. So the domestics are merging. At some point, the internationals will come in because they'll want it. And the biggest internationals that will be buyers are the LNG operators, because many of them do not have enough reserves to meet their obligations. So they're either going to have to do a deal with a Tourmaline or an ARC to buy gas from them, or they're going to have to go out and say, we're buying companies with 20, 30 years reserves. And that's what then will protect them on the contracts where they have them with Korea or China or Japan, that they have 20 years of reserves. So there's two potential buyers, and the key thing is buyers, and that's what's going to make this a nice, profitable cycle with quite a bit higher commodity prices than the lousy ones they are right now. Because we're waiting for LNG Canada to start up with regular shipments, the price of AECO is under $1. Nobody can make money at that. They need $1.50 to make money. $2.30 in the United States, barely people make money. So you need $3, $4 in the States. We need $3, $4 in Canada. There's that 36 cents in the middle that shows how cheaper Canada would be than the States. But still, anything $2.50 or better, the industry starts making some decent money. $3, $4, they start coining it well, pay down debt, grow their business. And many of the companies out there have a growth profile. That's the thing that's exciting, because our basin is not mature like the Permian Basin is or Appalachia is. They have a lot of reserves, but a lot of that's tier 2, tier 3 drilling. We have a lot of tier 1 drilling still ahead of us. And that was one of the reasons why we saw Tourmaline go after Crew, because they're producing 30,000 BOEs a day. But with tier 1 drilling, they could take that up to 60,000 BOEs a day. And that was the incentive for Tourmaline to go after them. And that deal will close in early October.
A lot of our listeners that are actively trading in the oil patch and understand a lot of these names are going to have one level of awareness about this. But for some of our other listeners who aren't actually actively trading in the oil and gas, it's kind of nice in a way to know that Canada is the world's fourth largest petroleum producer. When I say petroleum, I mean oil. And it's kind of nice to know that we can sell to the rest of the world instead of just to America now for our oil and for our natural gas. Now, actually, speaking of natural gas, I saw the head of LNG Canada just this week saying they've started to ship gas out to Kitimat, and they will start exporting LNG out of Kitimat about the middle of next year. I'm going to assume, Joseph, that a lot of those exports are going to go to China. And as you were just saying, the fact that we now have another market ought to raise natural gas prices for the Canadian producers.
Yeah, the LNG Canada will be taking on a regular basis in 2025 2.1 BCF a day. Let me put that in context. All of the Western Canadian Sedimentary Basin is 17 BCF. So 2.1 is a nice bounce already, and that'll raise the prices there. The key thing is when you take into account all the other projects, the ones backed by Enbridge, Rockies LNG, the Iceland Nation, you add all of those in, that's 6-7 BCF by the end of the decade. We were talking about this 20 years ago, you and I, at the World Outlook Conference. We are now potentially by the end of this decade going to have 6-7 BCF of export capacity relative to that 17. That tells you we're going to have to spend a lot of money, and nobody's going to spend money in the energy industry when shareholders are telling them we want money back to us, NCIBs, dividends. They've got to be able to prove to the shareholders we're going to make a lot more money by doing this than giving you directly more money. We'll give you a dividend or we'll keep the NCIB when the stock's cheap. But the better choice for us is to drill with the drill bit, build up our reserves, and sell that in the highest price markets in the world, which would be Asia and Europe.
So, Joseph, this might be a really good place to segue into the conference that you're going to have coming up on the October 19 in Mount Royal University in Calgary. I think I've been to 4, and then we had one that was on the internet or something because of COVID a few years ago. And I'm going to say this, I've said it before, but it just, I love going there and getting an idea of the technology that our Canadian companies are using these days. It's just amazing, folks. I'm telling you, what they're using to not only get that product out of the ground, but to move it around, process it, and all that kind of thing. So tell me about the conference that's coming up on the 19th of October in Calgary.
Well, we started this in 2018 because we thought that not only is it worthwhile having an independent research product that we started in 2017, after talking with the people at the World Outlook who were saying that there's lack of independent research out there. Why did you cover E&P and service companies? And then we had more subscribers saying, we want you, can you cover the pipeline infrastructure? Because we're older, we need the dividend income. But we said, why don't we have the companies come out? Because individual investors, don't really get to see them in the old days outside of AGMs. And now everything on AGMs is virtual meetings. So we thought, why not have the companies come out, do 35-minute presentation sections where they talk about their company for 25 minutes, moderated Q&A for 10. But the best is that they have booth time. So if you can come up and talk to the CEO, Chris Carlson of Birchcliff, go and talk to Dan Halleck at Total Energy, go and talk to Mike Rose at Tourmaline. All of these, for the majority, the CEOs come and present. And that face time is very valuable if you own those names. So if you own names in the oil patch, take a look at our list of companies that are presenting. And if you own any of those names, here is a chance for you to get very high comfort with the names you own. Last year, we had 40 companies presenting. This year, our goal is 45. We have 41 signed up already. We're looking to sign up the rest of them right now. It'll be an all-day event. There's food during the whole day, starting with breakfast. Last year, the Premier opened the conference. This year, Brian Jean, our energy minister, will be opening the conference. Last year, we had 640 people. We've taken more space, and we can have 750 people there. So if you want to come to the conference, you can either buy tickets directly on the website, or the best deal is to buy the subscription with the discount, which we can talk about later, for Money Talks and World Outlook, listeners, and they can then get 2 tickets to come to the conference. So if you can come to Calgary on the 18th of October, be all day at the conference on the 19th, go home on the 20th. It's one of the only conferences for individual investors to get to know and visit with the companies they own or with companies that they might want to own. And as I said, we'll have 45 companies there. So there's got to be something that triggers your interest.
Yeah, and so the website is schachterenergy.ca or .com, Joseph?
The website is www.schachterenergyreport.com. And then the conference is www.catchtheenergyconference.com.
Okay, so and people can, if they just Google Joseph Schachter, you'll find your way to the webpage. Hey, like I said, I've been there and I've really enjoyed it, the show. But you have like at any one time, you've got about four different people to choose from, or four different presentations, I should say, to choose from. An all day show, and Joseph, I'll say it again. I've been just tickled, honestly, that I'm so proud of what these Canadian companies are doing, not just in Canada, but in areas outside the world with their technology to do better jobs. And everybody's so much more, let's say, savvy and aware these days of being clean and environmentally right, so they're not a disaster. And I think the Canadian public ought to be really proud of the energy sector that we have in this country and the things that they're doing for all of us.
Yeah, I would agree. Everything from fracking has gone from diesel to using natural gas. Companies are using more electricity, so they don't use diesel. The industry is probably leading on climate initiative, clean tech than anyone, any other part of the world. And so Canada should be getting kudos, instead of the attack from the federal government, because they are doing a great job and they're bringing it on very efficiently, and they're bringing on resources with the First Nations. The relationship between the energy patch in Saskatchewan, Alberta, and BC has gone from, say, adversarial 30, 40 years ago to working together and partnership in ownership. And I think that's something Canada should be proud of, that everybody's on the table and everybody benefits.
Joseph, listen, that just reminds me. Every week, I read your report, Eye on Energy. It's about a 5 minute read, I guess, something like that, where you'll look at what's going on in the news, what the price action is on both oil and on natural gas. And for folks that are listening and they kind of want to get an introduction to what Joseph does, Eye on Energy. Again, you'll need to go to Schachter. Look up
Energy
Joseph.
report.
Thank you, Schachter Energy Report, and register. But it's free, and that'll kind of give you a feel for what Joseph does. Where his paid service comes in handy is if you want to look at his advice and the different stocks that he covers. Joseph, you're covering about 40 or 50 stocks in the Canadian energy market right now. I think is that about right?
Our count now is 38, and it'll be 37 when crew gets taken over. The team has capacity for 40, so we'll probably. Last year we lost 3 to takeovers. This year, this is the first one, crew, and I think over the years we'll see more of them. So we always try to have new fresh faces, new companies at the conference, and we watch them for a year, watch their quarterly results, and talk to management. And then if we like the story and think it'll have traction with our subscribers, then we add that name to our research list. So we have space for 3 right now. And again, we're looking at quite a few new companies this year. For example, we added Strathcona, Kowitno, and Rubelite to our research list. And we have a number of companies that we're watching right now. And usually, if we see that there's traction to the stories and what they say they're going to do, they do. There's high insider ownership. They don't have debt problems. All those are the things we look at: price to NAV, price to cash flow. So we do our homework, and if it all comes together, then it's a name that could go on our recommended list or first coverage list, and then if the price is right, on our recommended price list.
Okay, just before we wrap it up here, let's back out to the macro view a little bit. We've had prices come down here below $70 on WTI. I know you think prices are going to go considerably higher over the next couple of years. And maybe just put some numbers on that. But I mean, one of the things that I've been puzzled by is this thing we call geopolitical risk premium, which I suppose in the plainest of language means if you're concerned that, say, Iran and Israel are going to get into a head-on-head war with each other, then the price would go up. So, that would expand the risk premium that you have. Where do you think we are, or is the risk premium even there these days? I mean, it must be kind of small compared to what it's been when people were really stressed out.
Well, when they were worried about Iran in March, April, we were looking at a $20 premium for war. Now I think we're looking at a $6-7 premium because of the recent pager and walkie-talkie attack against the Hezbollah commanders by Israel, which just happened in recent days. So that's why we popped from 65 to 72. If things quiet down, we'll probably go back. People will look into the weekly data coming out of China, look at the weekly data coming out of the States from the EIA, the Energy Information Administration, which provides the oil and gas data. And I think that's when we'll see the price come back sub 70 again. And then hopefully you have the names that you want to buy. Hopefully they back off to a very attractive price like they were last week, Tuesday. And then you can add them to your positions and grow your positions attractively. And that's what we do when we find names. We have a list of 10 names we own. At some point, we may own a max of 12. When we're bearish, we may only own 2 or 3. Right now, we own 10. We take an investment approach. We want to own them for 3 to 5 years. And the reason we want to do that is right now, cash flows are depressed because of low natural gas prices, and $72 oil is lower than the 100 that I'm looking at 3 years from now. So if companies go from 2 to 3 times depressed cash flow, at the top of the cycle, they trade at 5 to 7 times peak cash flow. And that's how you get 5 and 10 baggers. On the NAV side, companies today are trading at under their proved, developed, producing reserves, which is what the banks lend against. And at the top of the market, they'll pay for proved non-producing and probable reserves. And that gap can be a 3 or 5 times number, especially if the price of oil goes up, then the engineering firms will give a higher value to the reserves. So we look at that and we say that in general, for E&P companies, there's potential for 5 baggers out there. People don't realize that when you look at the bottom in 2020, Tourmaline was trading at $7. It was trading just a year ago, in the 70s. So it was a 10 bagger. So people, should think about what happened if they were investors in the 70 cycle. Dome Petroleum, HBOG, there were some great wins. In the 2099-08 cycle, Centurion and Sterling and other names were 20 baggers. So there's a lot of money that can be made. The question is your risk profile. Do you want dividend income? Do you want a smaller entrepreneurial company that can grow faster? Or are you looking for a nice company that can have 5-10% growth, pay you a dividend? I think all of those things, you sit down with your investment advisor to decide what's appropriate in your case, and then be ready to buy the bargains in those names that you're looking at. So we're very, very bullish. And my view is if we get on the oil side, I think we'll see all-time highs. This super commodity cycle, we saw cocoa and copper and gold take off. And I think before this is over, we will be above the 147 that we had in summer of 2008, because I think there'll be shortages, not enough money being invested. Third world demand will pick up. U.S. will recover. Even if it's a 2% economic recovery growth, you'll see 2% growth in demand. And also you'll see China recover with in China and India, biggest populations in the world. If they start growing at 4 or 5%, that's how you get those 2-3 million barrel increments. And it takes a long time to add a lot of oil. If you remember, we found a lot of oil in the Beaufort Sea. Are we producing it?
Mm-hmm.
We're not.
Good question. Hey, Joseph, listen, thanks for taking a few minutes to be with us here this morning. I think everybody probably has a sense that there's an opportunity for to be invested in the energy space, given the rise in demand that you're anticipating over the next couple of years. They can go to the conference coming up on the October 19 at the Mount Royal University in Calgary. They can subscribe to your service that recommends the different stocks, and just to even get their feet wet or get your toe in the water or whatever it is, check out the Eye on Energy report that's available once a week. Joseph gives his views on the important things affecting the energy market that week. Joseph, before we say goodbye, any one last thought for us?
Well, we're looking forward to seeing you and Grant hosting the Money Talks room here. If it wasn't for Money Talks and World Outlook, we would never have started this project. And please remember, and Grant will be sending it to you, as a thank you for all the support that we've gotten over the years with Money Talks, World Outlook, Michael, yourself. The discount we have, which is only offered because of the relationship, is $100 off the annual and $100 off the quarterly. The annual is at $9.99, so that's $8.99, and 100 off the quarterly, $2.99 for $1.99, and that's cheaper than buying 2 tickets to come to the conference. So go look at the website. I know Grant's going to be sending out some information on that later on, but I think the energy sector is going to be a big reward for people. I think we're in a major commodity cycle. So when the gold bugs come on and talk and the uranium bugs come and talk, listen to them, because this is serious. And we had, people remember 74 to 81 or 99 to 2008. This is going to be something really special between now and the end of the decade. And a lot of money is going to be made. And for investors and traders, definitely keep your eye on energy.
Well, Joseph, I look forward to seeing you in Calgary. I hope it doesn't snow again.
There's threats in the mountains today.
Okay, October 19th, I'll be in Calgary along with Grant to be at your show. Thanks very much for being with us, Joe.
My pleasure as always. Take good care.
Bye.